Video is going to be a bit different. Rather than focusing too much on technicals, we're going to be focusing on the process of trading and some things that you really need to get done before you become a really profitable trader. So we'll start off by looking at this Forex trading journal. So this is a file I made on Excel. It's pretty easy. You guys can make it for yourself, or you guys can message me on Instagram or something, and I can send you this. But yeah, essentially I created a watch list. Like, this is the first step, is because you don't want to just be looking for random trades throughout the day. Like, you're gonna miss a lot of opportunities. You're gonna be catching the wrong opportunities. You're gonna be eager to catch trades. Rather, if you have a watch list, you can have a more calm and calculated approach towards trading, and it'll make it easier for your psychology, as well as you'll be managing your time way better, and you won't be on the charts 24/7, because over trading is also very detrimental, as well as too much chart time while you're trading. Too much chart time is not bad if you're backtesting and just practicing your craft at the beginning, but eventually, once you master a strategy, it can be detrimental, because people think more is always better, but that's not always true. Sometimes less is more. But yeah, so basically on this side, we can see this column. I have the pair. So these are the pairs I trade for now. I used to have more, but for now I lowered it to these. And then if I find a potential trade, I'm gonna be like, suppose for gold, I'm looking for a long opportunity. I'm gonna highlight this box long. So suppose I'm looking for a GJ long as well. I'll highlight this, and then suppose I'm looking for a USD short. I'll highlight, my bad. I'll highlight this. Like maybe a different color. So now I know that. Suppose I did this before New York session, maybe an hour before New York. So now I know I'm looking for these three trades. But as soon as I add one of these colors, like suppose I'm looking for a long opportunity, I'm gonna fill in the rest. So I also have this WIT. So this is either I'm waiting for a trade to happen, or an incoming trade is coming. So if I'm waiting for a trade or waiting for price action to form, it's like I'm looking for a long, like maybe it's a good long opportunity, but I'm still waiting for a proper entry signal or proper area of entry or proper timing or whatever it may be, right? And incoming is maybe it's a long trade, but that's an incoming potential trade. So it's coming soon. Like maybe the price action formed, and maybe it's like 15 minutes before I gotta take the trade right before New York, So it's incoming, like, or maybe some news is coming. I'm gonna enter it after news. So like, yeah, it's incoming trade would be a trade that's gonna be coming very soon that I'm likely gonna take. And T is traded. That means I'm already in the trade, or I've been holding the trade from like yesterday or so on, or the signal is already valid, and I can take the trade. So that's what I'll put T. So WIT will give me the current process of where I am in regards to the specific trade. And for the environment, it's the type of trading environment I'm in. So there's a lot of different ways to categorize your environments. It all depends on your own systems. For me, I have a few different environments that are key for select setups and select systems. So certain setups, like, it's not one setup. It's not like, oh, one specific thing, this happens and you enter the trade. No, it's not as simple as that. It's like a complex system of maybe four or five or six different things. And each setup, by setup I mean system. So each setup is revolving around a certain environment, because it's gonna maybe have an 80 or 90% win rate in one environment, but in the other environment it might only have a 60% win rate. So I prefer to only take those trades in the correct environment, rather than entering a lot of shitty trades. And FR is this is related to environment. So if you categorize your environment, this I'm not gonna tell you all about. This is gonna be a secret I'm keeping for my students only. Fuck it. I don't gotta give y'all every nug. And this is phase. So yeah, phase one is gonna be for me. I'm gonna be writing the confluences of any initial confluence I see, maybe over here, for this particular trade. And then phase two is, suppose after whatever builds on these confluences, I'll add on to phase two, and I might enter the trade maybe around here, and then suppose I haven't still entered the trade, and I see more confluence. Finally, I might enter phase three, and then I have space to add 2 points or whatever it is. And this is basically your confluences or your reasons for entry. So whatever it may be. An example for retail traders is break and retest. I personally do not trade break and retest, because I've got slaughtered in the past when I started trading with break and retest, and it has been horrible. So yeah, I'm not gonna break and retest, because yeah, that's the first thing that traders are taught, and that's the first thing that traders are slaughtered with and raped with. So I'd rather just take the opposite. If I see a break and retest, I usually take the opposite of the trade, because it's a more higher chance of winning. But yeah, that's just an example of like some of the confluences you could add. So instead of phase one, you could write confluence one, confluence two. But I prefer to look at it as in phases, because I build on a trade idea, and then eventually, if I initiate the trade, I'll highlight this box blue or whatever. If it's a buy or if it's a short, I'll have it another color. And yeah, that's it for the watch list. And this watch list makes it really simple because suppose I'm looking for, like, as I did before, right, I'll highlight whatever the boxes I need. So it makes it easy. I can ignore all the other bullshit. I can ignore the other trades, and I can focus on what I need. And then the second part of this is the journal. So as soon as I have the trade initiated, then I transfer on from this watch list page to the journal. And from the journal, I can give you guys this as well. But on the journal, I'll be just filling this in. So it's trade number one. I risk 5% per trade. You guys can do SO. I would recommend for beginners to risk maybe about 1 to 2%, maybe 3%, just for beginners, because you guys might have losing streaks, and if you're risking 5% and you lose 5 trades in a row, you're gonna be down. You're gonna be down heavy, like at least 15% or 20%. You're gonna be down. You're not going down exactly 25% because you're not risking 5% for everything, right? If you lose, you're gonna be risking less and less. Oh yeah, so the pair over here in action. This is gonna be if I'm buying it, if I'm selling it, if I have a sell limit, if I have a buy limit, whatever it is. And that's gonna be the action. And of course TP, that's self-explanatory. SL. So I can either do this. I'm gonna be writing it in pips, but people can write it in price or profits. But I don't really care about the price number because that's not gonna really give me any value in the future. Rather than it's just gonna be a random point on the chart. So rather I'd write TP in pips. Maybe if my TP is 100 pips, my SL might be 20 pips. Because I always go from 1 to 5 risk to reward, which brings us to our next category, risk to reward. So whatever the risk to reward is, I'll be writing it in this. My minimum is 1 to 5, but oftentimes I'll be hitting 1 to 7, 1 to 10, 1 to 15 even. And sometimes even 1 to 30, 1 to 40 on those rare trades that you might have saw in my previous video, I believe, but where I go over my 2019 trading history. I go over every single trade that's available on trading history. It's like over 400 trades. So yeah, you'll see the risk reward. At the beginning of my trading, it was a bit lower at 1 to 3, but as I progressed, I increased it to 1 to 5 minimum. And TS is a trailing stop. So suppose, like, this category is generally going to be empty, not always, but like if trailing stop, if I put a trailing stop, like suppose I'm in profit 70 or 80 pips, but my TP is 100 pips, I might put a trailing stop at 50 pips. So then I'll initiate it. I'll add in 50 pips here, right? Just so I know. But most times I won't be writing it. I'll be waiting for TP or SL. And I'll put my SL to break even once I'm up like 1 to 3 risk reward. And not always. It depends on price action and what my intuition tells me. ROI is the return on investment. So once the trade is complete, I'll be writing whatever I return on that particular trade, maybe plus 20%, plus 30%, plus 10%, or even minus 5%. The lowest it can ever be is minus 5% because that's the maximum I'm risking. And the remarks is what happened. So like what happened, trailing stop hit, TP hit, SL hit, closed manually, whatever it was. So this is like the closing statement of whatever happened after the trade is completed. And the date and time, I like to write the initial date and the initial time. So if I enter, let's say today is March 2nd, I'll look 222 alignment. Oh fuck, 999, whatever. Yeah, so the date and time, and then and this is key because suppose I like after I'm done, after I go through these 50 trades, because after 50 trades, I'm gonna reanalyze it and repeat it. So I just made it 50 trades because after 50, I should analyze what I did and then I'll start it again. But yeah, so it's key because I can see maybe at a certain time I might be losing way more, or the opposite. I might be at a certain time I might be winning way more. Maybe right at 10 a.m. EST I might have all winners. So that just might give me, maybe next month I'll try trading specifically just at the time, just as a random example, and that way I'm gonna be helping improve my win rate. And then duration is the time of trade, the length of the trade, how long I've been holding it for, or how long it takes to close with the trade, right? And the environment goes back to the watch list. So what environment was the trade in? It all depends on how you view the charts. It's all taught in FTTM, but I'm not going to be taking on any new students. I don't need students. I just need guys to build. I needed guys originally to build for my own trading floor. And yeah, I think I have a sufficient amount of guys. Like a few, right? Like 3 or 4, and that's good enough for me. I can build these guys up, and that's enough. Alright, it's my cousin. Yeah, so yeah, this is confluence. These are the confluence. See, as I said, over here is confluence, but over here it was phases. So I'll break down these phases into more like whatever points I had in this, into more general key points in under confluence, 1, 2, or 3 if I need. Most likely I can fill it in 2 or 3. Sometimes I'll need more, but that's fine. And that will just show me why I enter the trade. So when I go back in time, I can see maybe some certain confluences are giving me a higher win rate. compared to certain confluences which might be giving me a lower win rate. So after the 50 trades, I can analyze and repeat, because in trading it's a constantly adapting and progressing environment. So a trader must always constantly adapt, and that's part of trading. Like every single trade, you need to journal it so you can adapt from it, because the market is always moving. It's going to keep on changing. Banks are going to keep on adapting. Algorithms are going to keep on adapting. As people become more profitable, they got to do more and more manipulation to capitalize for themselves, right? So that's why it's very key that traders start adapting and journaling all of their moves, and that way you can get better and better and progress with the markets. And finally, I'm going to be adding I add a trading view link so I can go back and look at the trade. But I would suggest you guys, if you guys are adding a trading view link, make sure when you guys post ideas, you guys post them on the 4 hour time frame or higher, because if you guys post it on the 1 hour or 30 minute, if you go back to the trading view chart in about a year or so, the link's not going to be working no more. The link's going to be, because they don't store enough data. So it's key that you guys save links or you publish ideas that are 4 hour or higher. But yeah, this is my trading journal, and this is my watch list. And you guys can message me on Instagram, just send me your email, and I can send you guys a copy of this for sure. And yeah, that's pretty much it for my Forex journal and my watch list. Nothing else I just wanted to share with you guys is this book, Reality Transurfing. It's a really key book, and it helped me a lot in my journey. And yeah, it's a very, very important book, and I guarantee that it will help improve your life in one way or another. And just read about it. It shows you about kind of how reality works and how you can use it to, or you can use it to help improve your life, but also you'll also become more conscious of the negativities around you that have been holding you back, which you might not be conscious of currently, right? And I was a victim of that myself as well, but it's all part of the state. It's all part of the learning stages. And this is also a really good book, Becoming Supernatural by Dr. Joe Dispenza. This book helps you realize a reality beyond our own. And it's really good for meditation and becoming a higher version of yourself, or connecting with your higher self. I wouldn't say becoming a higher version of yourself, because you're basically just going to connect with the highest version of yourself. You don't have to become that. You just have to realize it. And yeah, and we'll go over one technical thing for this video. We'll start off, we'll just do goals for today. We'll start off with the monthly. We'll do a top-down analysis. So we can see, looking at the left, we're near this supply area over here, and we stop hunted big time. So we blocked out, because this is also a supply area, so we stopped out everyone from this supply area. Look, it's like basically to the T, and we came back down, closed below last month. And now we can go to the weekly. Last week we closed really bullish, and we can see this area, this big ass wick. So this means that there's a lot of liquidity trapped here. The reason that we melted so easily, that means there's a lot of buy orders here, and there's also a lot of stop losses. So because of the stop losses of people who were trying to sell, people who are trying to, people who are trying to sell. So there's whoever was selling around here, the stop losses were here. So their stop losses provided a lot of liquidity for banks to do the movements that they wanted, as well as it also provided opportunity for. Another way it provided opportunity for banks was because a lot of people were buying this big ass engulf. A lot of traders just look at an engulf like, oh, we're in buying market. Yeah, you might have been right over here. Engulf, yeah, we continue. You might have been right again, and then over here you might have got manipulated. You got to manipulate it, so and so on. So a lot of traders were buying it, and that gave banks enough liquidity, because the banks, they cannot just sell the market or buy the market. They can only move the market if there is liquidity. Because if they're buying it, they have to be selling it to someone, and if they're selling it, someone else has to be buying it. So yeah, there's a lot of liquidity over here. So this is like a really, really major zone. It's like a supply area. And then, as you can tell by the wick, so generally whenever there's a supply area where there's liquidity trapped over here, so we tend to tap this liquidity area again, as well as whatever's going on in the news right now. I don't want to be saying it and spreading more negativity, but whenever there is negative things going on in the world, gold and other commodities generally tend to rise in value. So yeah, because it's like a safe haven currency, right? Gold, the yen, and so on. So it's gonna likely keep on continuing up. But that's just a fundamental aspect. And I don't really care about fundamentals. I'm a technical trader. I'm an intuitional based trader. I'm an institutional trader. So it's not gonna be a lot based on fundamentals. Yeah, they're there. I accept them, but I take everything with a grain of salt. I'm only gonna be using them if they align with my intuition, and then if they align with my technical analysis. So we can see this area still holds. I just made it a bit sharper. And on the daily, you can see we had a very bearish close on Thursday. Actually, wait, it's Monday. So yeah, it's closed on Thursday, and then Friday we had a doji, so it's indecision. So we're potentially right now we're making a morning star pattern. So if the daily closes like this, closes bullish, engulfing this for today. Wait, this is Monday's, my bad. This is Friday's candle, and this is Monday's, and this is Tuesday's candle. Cause yeah, I'm in Canada. So yeah, this is bearish. So if this closes bullish today, that'll give us a pretty good indication of a morning star. So that'll show that we can potentially still go up. But nonetheless, we might. There's also a demand area right around here. So I think we might potentially tap this, gather liquidity around here before flying up again, and also stopping out any of the guys who are trying to sell this morning star. I mean, buy this morning star. And that's the daily. There's like a kind of a trend line. I don't really use trend lines, but this is to give you an indication of a downtrend, right? And once it breaks, that'll give you a clear indication of an uptrend. But I don't really use it in that sense, because if you enter right on here, you're getting a shitty entry. Like, this is your stop loss area and your target is this. That's horrible, you know. But it's just the way retail traders sometimes trade. It can be profitable for some people because they'll have a really high win rate. But for me personally, I have a high win rate, and I always use a minimum 1 to 5 risk to reward. Because if it's not worth the reward, I'm not taking the risk. And as you can see, as we go to this smaller and smaller time frame, we can sharpen up our zones. So this is like you can see this big bearish candle, exhaustion right around here, and we fly up. And this might be making like a double bottom right around here before flying back up. So that would be a good opportunity, potentially. But it all depends on how PA forms around here. You know, I'm not going to be buying it simply when it comes over here. That's stupid. But yeah, and the risk reward for this trade would potentially be like it's potential, because I have to see PA form, then I can add a stop loss, you know, because otherwise I don't want to like have a limit and then get stopped out by like wicks like these. And the RR and the RR for this trade will be at least like 1 to 5 right around here. So that's perfect. That'll be an optimal trade. And then if you can extend it, you know, put your stop loss at break even, and then you can even catch 1 to 7. And if it goes to all-time highs, you know, you can go 1 to 10, 1 to 20, and so on. That's why I keep runners, because in case it does keep breaking above, which it likely will, because market tends to do things that are very unlikely, and I think it's very unlikely for it to break above. So in the fact that it's very unlikely, it makes it very likely. I might just be quoting myself on this in the next video after it plays out, because that happens in a lot of my videos. Like, I'll give you guys ideas and I'll play out to the T. But yeah, I'm gonna try keeping this video short, and let's quickly just go through the smaller time frame. But yeah, for now there's no trade. Yeah, as you can see, there's also this minor TL over here, where a lot of breakout traders will be trading. So these areas offer a lot of area for manipulation, for banks manipulation here, in all these areas. But I believe we're gonna break below. So once we break below, just think of it psychology wise. Once we break below, every single retail trader is gonna be like, oh, we broke the trend line. Now it's a sell. And then so what do banks do? They fly up. And as they start flying up, what are they gonna do? People are gonna be like, oh, it's a buy, it's a double bottom. But it's also a trend line retest, so the banks are gonna sell it again. They're gonna sell it again, and once they're selling, people are gonna be like, oh, it's a retest continuation down. And once again, banks are gonna get enough volume to finally continue the original double bottom move, pull back, and from here will probably be the original move, and it'll break up. But that's just a way of looking at psychology, of trading psychology, and how you can capitalize on how you can capitalize on thinking apart from the average, thinking what the average mind will be thinking what retail traders will be thinking, and doing the complete opposite. And that's a skill of intuition that you can gain over time, and it will be very beneficial in the markets. It's even more efficient than technical analysis. It's more efficient than anything. It's the most efficient way to trade is with intuition. But of course, with that, it comes with a lot of hard work to develop it. It takes a lot of chart time. It takes a lot of practice. It takes a lot of discipline. It takes a lot of persistency. It takes a lot of consistency. It takes a lot of brain work. It will literally change who you are, because there's no way you can stay the same person as you are in the same limiting beliefs and gain that intuition. It's literally gonna mold you into a new person, or rather into your true person, because currently you're molded into a random person. Like, your parents gave you a name. You're not no name. You're not no person. You know, you are nothing. But you're in nothing. You are everything. So yeah, I'm just gonna leave it off as that, and I hope you guys can learn something from this. And peace out. Pipionaire Out, boys. and girls. Peace.